I guess so. Talking about in the industrial market in a nutshell, so we've seen in our market, let's call it an oversupply and overbuilding of distribution and big box development as well. So the Phoenix commercial real estate investment volume actually decreased 75% in the first quarter of this year compared to the peak of 2021. So obviously interest rates are taking into effect as well. That's also trickling into the multifamily sector where you do have some more floating rate debt in place, and obviously locking in a rate at 3% and now refining at 6 or 7 is going to be a very different story.
Right, and one of the factors out there too is with all these millions of square feet of product coming to the market, we're probably going to start to see a leveling out, if not even a potential decline in average lease rates too. Which,
Yep.
if you're a seller and selling a property with a lease coming due, investors aren't going to be able to underwrite as high of a lease rate, and thus bringing down the sale price potentially.
Exactly. For the most part, industrial real estate has done really well. It's very resilient. About 31% of the sales volume this year in Phoenix was accounted for industrial. So, still pretty healthy compared to what we've seen in prior years. Retail and office actually reached about 338 million, so a 59% decline from 2021. So, office sector saw 250 million in trades, a 70% drop from 2021, and then medical office buildings are still performing actually relatively well too.
It's nice to see because I know every time we take out a listing, it seems like, especially if it's an owner user deal,
Yeah.
the price per square foot's only pushing higher and higher with every deal.
Yeah,
So, and partly that's because we're focusing on a little bit smaller product below that 50,000 square feet in general.
exactly. Another thing to note is that construction has really started to fallen off. I guess 14 months ago, from the first quarter of 2023, industrial construction had already dropped from 40% of peak values, which is super interesting. And then it fell another 60% in the prior 12 months as well. So obviously, quarterly new construction completions will continue to fall. Obviously, construction costs are at play, as well as interest rate hikes as well. So it's probably going to be a little bit slower for a while, as we can imagine, and see, I guess, the tide go out.
If you look at that chart from CoStar showing 2024 new construction starts, it looks like we're pretty low on new construction for this year, which means closer to 2025, 2026, we're going to see not as much product hitting the market, and we still have a pretty good trend of companies moving here from California, and with our attractive business economy, with our jobs market being only 8 hours from Southern California and 35 million people, the demand is still there, which means that the long-term projection is still fairly solid.
I agree. Awesome.